Aave is the #1 lending protocol on the blockchain. It's got a market cap of $2.9 billion and users have trusted it with $18.2 billion of their funds in total locked value, and it pays almost $1 million in fees to its users every day. Today we're taking a look under the hood at what Aave is and identifying 4 scenarios that you can use the protocol for to make money. Okay guys, so in the traditional finance system, we have John. John wants to get a loan from the bank. He has to call them up, make an appointment with the bank manager, and once his loan gets approved, he has to provide collateral to the bank, which is normally going to be his house, and eventually the bank will give John the money, and then John can go out and buy his supercar with the loan from the bank. Now over time, John is going to repay the loan plus interest, and when it's all paid down, John is going to get his house back and it's no longer going to be used as collateral. Now this is slow and it's clunky, and if John wants to pay back the loan more quickly, he's going to face penalties, and that's all solved by Aave, which is a decentralized lending platform. So we'll say John wants to get his loan and he has some cryptocurrency or some stable coins like USDC. He provides these to Aave as collateral, and then using smart contracts, Aave can immediately approve the loan and John can get his money on the same day, in the same hour basically, and he can go out and he can buy his supercar instantly. Now John will still have to pay back the loan plus interest, and then he will get his Bitcoin back, and he'll be hoping in the meantime that Bitcoin has gone up in price. So he might actually get the car for free if Bitcoin has gone up by enough in the time that he had the loan out. Now this is more quick, it's easier, and there's no fines on John if he wants to pay back the loan more quickly, and there's just a lot less friction and a lot more speed. Now there's 4 ways that we can use Aave to make money. Basically we can go long on an asset like Bitcoin, so we think the price is going to go up. We provide our Bitcoin to Aave as collateral, and then we take a loan of USDC. Over time, the price of Bitcoin goes up by 30%, and then when we go back to use the Bitcoin to pay back the USDC, we still have 30% of our Bitcoin left because the price has gone up relative to USDC, and then what's left of the Bitcoin is basically going to be John's profit. On the other hand, we can also short Bitcoin or other assets like Ethereum if we think we're in a bear market. So we provide USDC as our collateral, and then we take a loan of Bitcoin as a loan. The price of Bitcoin goes down by 30%, and then we only have to use 70% of our USDC to pay back the Bitcoin loan, and the 30% that's left over then is going to be the profit for John. We can also do this by putting one asset against another asset. So we think Bitcoin is going to outperform Ethereum, so we take a loan of so we provide Bitcoin as our collateral and we take a loan of Ethereum. Bitcoin goes up by 30%, while Ethereum only goes up by 5%. So the 25% difference is going to be our profit when we decide to pay back the Ethereum loan amount. Now the 4th way that we can do this, and this is the most popular way, and this is the way that we do it, is that, okay, we're long on Bitcoin, so we provide Bitcoin as our collateral. We take a loan of USDC, and then instead of going out buying a supercar with the money from the loan, we actually use the loan to generate a higher interest rate than what we're paying. So say we're paying 7% here, we can use liquidity pools to earn between 60 and 120% per annum. So we provide that USDC into liquidity pools. We'll say the liquidity pool we're into is USDC and Bitcoin. So when someone wants to swap their USDC for Bitcoin or their Bitcoin for USDC, they have to pay a fee to the pool providers, and those fees accrue daily, and John is going to be able to take out his fees every day that he's earned from providing liquidity to the pools. Now John can use this money in a number of different ways. He can use it to increase his collateral by buying Bitcoin and adding it to the pool, which will bring down the loan to value ratio. He can also pay off some of the loan, or he can do a bit of both, or he could put 40% into Bitcoin,
30% into USDC, and then the remainder he can put it into a higher beta asset. So when the market pumps, we'll say Bitcoin goes up by 10%, and then the higher beta asset might go up by 30%. So he's earned even more money basically. The loan's being paid down over time. The price of the Bitcoin is going up. He's now got a fund of a higher beta asset that's gone up by even more. And John now has a flywheel, which is what we call it in DeFi, which can allow him to build wealth over time by basically employing a strategy using all of these components. Now, one thing we have to keep in mind when we're using Aave is that we don't want to get liquidated. So if we provide Bitcoin of 100K and we take a loan of USDC at, we take 40,000, that's a 40% loan to value ratio. And basically if the loan to value ratio goes above 90%, we get liquidated. So say Bitcoin goes down by 70 or 80%, and then the USDC is worth 92% of the Bitcoin, well then Aave is going to take the Bitcoin and it's going to keep it, and it's going to allow us to keep the USDC, and that's going to happen automatically. Now the loan to value ratio will be 90%, so you can use the USDC to buy back the Bitcoin and you'll only lose 10% in total, but it's still something to keep in mind and something that we don't want to happen to us. So just taking a quick look under the hood. Of Aave, we can see the various different networks that we can choose from. And we can borrow, and we can provide our collateral here, and we can take out our loans here. We've got our borrow power used, we've got our loan to value ratios, and basically we can take this USDC and do whatever we want to it. We can repay as much as we want, as quickly as we want. We can add more to the pools, which will bring down the loan to value ratio. And that's about it for Aave, guys. And if you're interested in making money with DeFi and you're interested in crypto, then make sure you subscribe to the channel and give us a like, and we'll be back very soon with another video.